Hi there and welcome to Money Talks, where we take a look at all aspects of the rural economy as it affects you in the ag sector. Well, it's been another busy week. The Reserve Bank's delayed by 6 months the introduction of tighter rules for rural lending. We'll look at what's behind that move. A new report from accounting giant KPMG says our agricultural sector has 5 years before low-cost third world producers start undercutting our commodity prices. Fonterra have a global presence to withstand pressure from emerging markets, but we'll be asking whether sectors like meat and wool are able to withstand that competition. And there's growing speculation Craig Norgate's rural portfolio capital may have to sell down its 12.5% stake in PGG Wrightson. Also in the news this week, South Canterbury Finance, which owes 30,000 investors $1.9 billion and is now planning a capital raising of $1.25 billion. But first up, it's ASB's rural economist James Shortall with his expert opinion on the week that was in the markets. Well, James, let's first turn our attention to the global outlook. What's been happening over the last week around the world?
Well, a lot of market attention has been focusing on what's been happening with companies in the US, and overall some of the company earnings has been pretty good. Last week we had Citigroup come out and they announced some pretty good profit levels, and bad debts are coming down, which is good news overall from the US market. Oil prices were back up today, and they've been disrupted with the volcanic eruption and some of the travel disruptions. Of course, that affects demand around the world, but oil prices are back up, and we're probably going to see that continuing, and fuel prices in New Zealand will probably go up.
Good old supply and demand. And American banking giant Goldman Sachs has been charged with fraud. What's going on there?
Yeah, well, that's a very interesting move by the Securities and Exchange Commission in the US. So they're accusing Goldman Sachs of setting up a product, a very complex product that was set up basically to fail. And on one side of the transaction, then someone's made $1 billion. On the other side, someone's lost $1 billion, and they say that they set that product basically to go that way. And I mean, I guess this had some pretty big repercussions, because on the downside of that transaction was ABN AMRO and Royal Bank of Scotland, so they had to be bailed out by the UK government.
Right, so there was a ripple effect, really.
Definitely. Yeah.
So the rest of Wall Street must be a bit worried about the SEC getting tough all of a sudden.
Well, it's right. It has had an effect on the financial institutions on Wall Street, and there's a bit of speculation as to what's going to happen. And already the UK and German governments have said that they're going to target some of these firms to see what's going on. So there could be some ripple effects here.
And indeed, what about their local people here, Goldman Sachs, JB Ware?
Yeah, well, it's important to remember that Goldman Sachs, JB Ware in Australia and New Zealand is 55% owned by local people. So it's
they're pretty insulated.
It's a little bit insulated, and actually 80% of the local private wealth businesses is owned by National Australia Bank, which is the head of BNZ. So it shouldn't have too much of an effect here.
Now, we discussed the Greek economic crisis last week in depth. Then, has there been any movement with the EU there?
Yeah, well, that did have some effects earlier on last week, but since that time, then there's still speculation that the Greek situation is going to get worse. Their government bonds are now actually priced twice as much as what investors pay for German bonds, so things are sort of blowing out, and all of a sudden we've got the IMF has gone into Greece, and they're going to try and sort out some of those problems. So the situation hasn't sort of come to what people were expecting, and it is sort of getting a little bit worse.
Well, there are massive amounts of money involved. 40 billion euros, I think, is being put in to haul Greece out of the hole.
So the EU's committed 30 billion euros and the IMF's committed 45 billion euros. So there's a lot of money that's sort of tied up, and their funding over the next few years is going to be quite important. And I guess the IMF want to ensure that they're able to do that.
Now, we're going to take a closer look at the Chinese market later on in the program, but James, can you give us an overview of what's happening in their economy at the present? There's been talk of their economic expansion, and of course that's creating inflationary pressures.
Yeah, well, in short, it's smoking.
Oh, right.
So the Chinese economy grew by 11.9% in the first quarter of this year, which is huge growth. They only really want to grow by 8% each year, so it's well above those levels. Their property market is really going through the roof. Bank lending last year sort of doubled from 2008 levels. So there's quite a few things that are going on, especially in their property market market that could potentially be inflationary. Right. And their government may have to look at cooling down their economy pretty soon just to make sure that, just to pull it back into check.
Yeah. Now, closer to home, and very briefly, how's the currency been trading over the last week?
Well, it's been a bit mixed. We've been up and down. Towards the end of last week, then we were trading quite high against the US dollar, just because there was some pretty good sentiment out in the market with some of the companies in the US providing pretty good earnings results. So the currency was up. We have sort of tracked back a little bit, but still above 71 cents against the US dollar.
Now, inflation numbers were out on Tuesday morning. What happened there?
They didn't meet market expectations, so Consumer Price Index increased 0.4% in the first quarter of this year, and the expectation was for a 0.6% increase. So the annual figure is up to 2%, and that's right bang in the middle of the Reserve Bank requirements. So, it means that the New Zealand economic outlook is sort of a little bit weaker than previously thought, and there isn't really a lot of pressure on prices at the moment.
And lastly, and very quickly, any movement in our main sectors over the last week? Dairy, sheep, beef?
The international lamb prices are still looking strong. International beef prices are still looking strong. The currency's still very high, so that has continued being a problem. But all things being equal, it's looking positive.
Indeed. Well, thanks, James. Well, there seems to be one predictable constant in all that. International markets are going to remain unpredictable. And I guess that won't be helped by the economic stresses caused by the European airline shutdown. Well, next up, financial advisor Don Fraser, who'll join our panel to discuss the business headlines making the rounds. Welcome back. Well, it's been an interesting week. Developments in rural lending, a spreading drought with all its downstream consequences for farmers, Chinese dairy expansion into New Zealand, South Canterbury Finance with its back to the wall despite a government guarantee to protect investors, and much else besides. Well, first up, Don, the Reserve Bank has delayed, the introduction of tighter rules for rural lending. Is that the right decision, do you think?
Well, for the moment it is. There's too much pressure on the farmers now, and banks already have tightened up their lending criteria really hard, so it's just work in progress, I think. And it's really all about capital ratios, isn't it, to lending, is that right?
Well, the Reserve Bank has indicated that they've got a few worries about the rural sector and some of the debt levels, so they are looking at some of the changes that are going to be impacted on rural lending, and one of those might be that the bank would have to hold more capital for each of those loans, so that has an impact on the lending and also the cost of it. So, yeah, there are some impacts coming through.
Indeed, but that's been delayed now till the end of the year, I believe.
Yeah, as far as I understand it is, yeah.
So what's behind the move then? Do you know, Don?
Well, I think that a lot of farmers are borrowing $30, $40 and $50 a kilogram milk solids, and banks are saying we don't want to lend more than 16, 17 or 20.
Right.
So that ratio is less than half of what they were lending in the peak.
So it's a move that's actually been in the pipeline for a little while, I guess, with those sorts of...
Well, the bank was nervous, the Reserve Bank was nervous about the level of debt, and rightly so. And the banks are actually pushing their customers now to get their debts down.
Yeah. Well, now, turning our attention to the economic impact of our drought-stricken regions, and I'll just take a little time to come up with some numbers here. It's estimated that more than 40% of our dairy farmers fall into official drought zones. Milk production in Northland is down by 29%, while areas like South Auckland and the Waikato are down by 6.5%. It's estimated that milk volumes nationally will be down by around 2%. James, won't these figures cost New Zealand hundreds of millions of dollars in lost exports? OK, only 2% down in total volume. It still represents a lot of money, doesn't it? Well,
it does, and we're going to probably see that really drop off over the next few months. So up until this point, the main dairying area has been the Waikato. Then they haven't been affected too much, but we're going to see it start to fall off pretty soon, and that's going to impact on exports probably from now through, over the next few months. And we did see that through the previous drought where dairy exports really did fall off.
Now, with drought on our minds, James, the big dry of 2008 cost the New Zealand economy an estimated $2.8 billion. That can't be good news for any of us.
Well, no, and we've got to remember that it's not only the farmers that get hurt by this, but also the downstream service industries in the rural communities. And we're already seeing, so there's not a lot of pressure on prices. The inflation numbers, sort of indicated that there's not